this morning and represent this market sector analysis of an industry I think would have tremendous value to our company's revenue, and it's representing unmanned air vehicles or drones. So the first key point of why we should invest in this industry is the size of the market and the growth of that market. So in the U.S., the market evaluation in 2018 was at $20.71 billion for that industry, and is projected to grow to $52.3 billion in 2025, giving it an compounded annual growth rate of 14%, which is massive and above the average for many industries. Another key point is actually that it's very diversified in the sense that every component of the industry is growing. So there's kind of three main components of unmanned air vehicles or drones. So you have your consumer drones, which represents things you may find in Best Buy or Walmart that the typical consumer can buy. Enterprise drones, which may represent Amazon, for example, who utilizes drones, or USPS utilizes drones to do some sort of shipping or packaging. And then you also have your government drones, which typically represents the military in regards to Department of Defense and things of that nature. You'll notice that consumer drones is the highest. Enterprise drones has the highest slope in terms of growth, and then government drones seems pretty flat. One key I want to make is that government drones, in terms of shipments, may be low, but the actual investment per shipment is actually very high. So this chart represents shipments by industry. So government drones, since the drone and the nature of the technology is far more complex, they tend to not purchase a ton of shipments or a ton of items or products. So their shipments may be low, but their actual investment was at $2.9 billion. The competitive landscape is also very favorable in terms of acquisitions. So as you'll notice, it's broken down into three tiers. So tier one competitors are companies that represent $1 billion or more in revenue. Tier two competitors are companies that represent $100 million to $1 billion in revenue a year. And then tier three competitors have less than $100 million in revenue. And you'll notice that large corporations only have 45% of the market, which is pretty favorable. It means that there's a lot of opportunity for acquisition. So in summary, there's a massive market. There's a ton of potential for growth, and the acquisition landscape is also very favorable. So because of these three key points, I believe would be very beneficial to our company if we invested. Thank you for your time.